Hey guys, this is Mr. Oxy coming at you live from Palm Beach. It is Thursday evening. It is May the 5th. And we got a couple of serious things to discuss, and it has nothing to do with the Dow going up and down for the past couple of days, 1,000 points per day. Yesterday, the Fed raised rates, and the Dow went up nearly 1,000 points. And today, the day after the Fed raised rates, the Dow went down, 1,000 points. But that's not what we want to talk about. I want to talk about Occidental Petroleum. I want to talk about Warren Buffett and Berkshire Hathaway. And I want to talk about tax. And the reason why I'm doing this is because there are many things that are happening which are either impacting us directly right now, which is a good thing because the share price of Occidental is going up, or otherwise which may impact you in the near future and create a tax event which will create a lot of liability for you in terms of having to pay those taxes. Now, just by way of a little bit of background, we see that WTI crude is trading at around $108 a barrel, Brent at 110, and natural gas almost $9. The prices are sky high. If you are in energy as an investor, you are probably a happy investor. If you are not in energy, I can't help you because I've been telling you for 2 years to buy energy. And if you are the unfortunate victim of hyperinflation, I can't help you either because these are things that we cannot control. One of the most significant hedges for people who have the ability to invest is to invest in energy when the price of energy skyrockets, so that as prices go up of every single thing that we consume, at least you have a bit of a hedge because you own energy. So as the energy price increases, you can offset the gains that you make on your energy investments by the higher prices that you might have to pay, for example, at the pump or at the supermarket. I fully acknowledge the fact that the majority of people are not in a position to invest, and I feel very, very sorry for people who are suffering as a result of this hyperinflation, which is a confluence of a variety of different events created by things like the higher oil price, bad politics, a number of different things that are impacting this on a macro level. But there are many, many people, senior people on fixed incomes, people working multiple low-wage jobs who are really struggling, and I feel for them. And I hope you share my sympathies for the people who are struggling right now in order to keep their heads above water. A couple of days ago, might have been yesterday or the day before, I posted onto our community channel that Berkshire is feasting on Oxy. His buys for May the 2nd and 3rd were earlier this week. Now he has him at 142 million shares of common stock. And then, of course, he still owns his preferreds and his warrants, which are now in the money. Where is Berkshire going with this? And where is Oxy going? And what is next? Now, nobody knows for sure, right? So I cannot possibly position myself as some kind of a mind reader to tell you what Warren Buffett or the team at Berkshire Hathaway are thinking. All we can do is look at the facts and then manage our wealth and our investments and our assets to match whatever the macro circumstances are that we cannot control. There's a good little adage there. We always say control the controllable. Anyway, this is Warren Buffett's recent buys. You can see he's been buying sort of in the higher end of the $50 range. His last buy on May the 3rd was at almost $58. And now puts him at 142,260,000 shares of Oxy common. So a couple of things have happened. So Jimmy Wong said, how many shares, percentage-wise, does Warren Buffett need to have to control the board and be able to use the tender offer to acquire Oxy? 51% or less. It's kind of complicated. I don't want to sell, says Jimmy. So now the answer to that is a little bit more complex than that. Warren Buffett doesn't need to have 51% ownership to control the board per se. He cannot control the board anyway because he's not a member of the board. And even like Carl Icahn, if you had to put 2 or 3 people on the board, you still don't control the board. You just have membership on the board or representation on the board. So that is a little bit of a red herring because it doesn't really apply. What does apply is that a large shareholder like Warren Buffett can force a proxy vote and ask the shareholders, which includes people like us, whether they would like to sell their Occidental shares at a premium. So let's say, for instance, Warren Buffett forces a proxy And that proxy vote says, hey, Mr. Oxy and friends, and everyone in your community, we are offering you $75 per share for your Occidental shares. Would you like to sell, yes or no? And then we can vote. Now, in the greater scheme of things, however we vote doesn't really make any difference. It doesn't really matter. And the reason for that is simply that our votes do not constitute enough ownership in order to actually swing the vote one way or the other. The guys who do have the vote are the people who are the institutional investors, and Occidental is heavily invested by institutions, in fact, over 70%. And the insiders, including the board, only own a little slither of Oxy. In fact, they own less than 1% of the total common that's outstanding in the market today. So in answer to Jimmy's question, I wrote this reply and I said, if Berkshire decides to take over Oxy and takes it private, for instance, like his insurance company, Geico, and people in the United States might be familiar with Geico, but outside of the United States and maybe Canada, people wouldn't know who Geico is. Geico originally was the government employees insurance company. Berkshire Hathaway purchased Geico and did not take it public. They just kept it private. So it's just part of the Berkshire family of companies. And they could do the same, for example, take over Oxy and take it private. So just take it off the market. And whatever the institutional investors decide in terms of a fair price, that is what you will get paid for your stock. So let's go into this one just a little bit deeper and see who these people are. So Berkshire Hathaway currently, this was as of the end of March, so it's not updated yet. He, at the end of March, according to his SEC filings, he had 136 million shares. And now we know, like I just showed you, he has 142 million shares. So his stake in Occidental Petroleum is more than 15%. Now, if we go down the line here in this particular column, you can see that if we take, let's say 15 plus 12 is 27, plus Vanguard, that's Dodge and Cox. Vanguard has another 10, that's 37. And then we have a few here that quickly get you to 50. So getting more than 50% of the vote, if Berkshire Hathaway had to put in a call to Dodge and Cox and the Vanguard Group and BlackRock, for instance, and say, hey, I'm offering $75 for Oxy, will you take it? You know what? There's a really good chance that they might say yes, as we recently saw, for instance, with Twitter. Now, if we look at the SEC filing for Berkshire Hathaway, and specifically this one is Warren Buffett's most recent filing, there's the little snippet that I just showed you, which shows that he owns 142,260,618 common shares. However, he also owns 100,000 preferreds, and those are worth 100,000 each, which is 10 billion. And in addition to that, right here at the bottom is warrants to purchase common stock at a price, an exercise price of $59.62. I know it's really small for you on the screen, so I'm just reading it for you. So Warren Buffett owns warrants that allows him to purchase an additional 83,858,000, almost 84 million shares in addition, because his warrants are in the money, so he can exercise these any day he wants. And right now, he can almost do a swap and put a little bit of cash in the bank if he had to exercise those warrants. So now if you add this together, you can say 142 million common plus another 80 something million, and you're already at 230 million common shares out of a total pool of only 940. So in answer to Jimmy's question, Warren Buffett, especially if you include his debt, which is the preferred, is already in a very strong position as by far the largest owner of Occidental Petroleum. Now there's a footnote down here at the bottom, and you'll see next to this $59.62 up here, it says number 11. Now, this is going to be really, really tiny. So if you bear with me for a second, I'm just going to read from it. It says warrants contain a provision that adjusts the exercise price and number of shares that the issuer's common stock issuable, exercisable at certain events. As such, the exercise price and the number of shares of the issuer's common stock issuable on exercise is reported in the form is subject to change, blah, 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 blah. It says on June the 26th, 2020, the issuer's board of directors declared a distribution in common shareholders of warrants. Remember, we all got those, right? And then to purchase additional shares of common stock, which distribution resulted in an anti-dilution adjustment to the warrants owned by Berkshire, which lowered the exercise price to $59.62 and increased the number of shares issuable on exercise of the warrants to 83,858,000. So that's where that number comes from, right? So you got 142 million shares of common that Warren Buffett currently owns. Plus, he can exercise on any given day. He may do this tomorrow. An additional almost 84 million shares that he can exercise just like that, because his exercise price $59.62, and Oxy still owes Warren Buffett $10 billion worth of debt. So a majority ownership by far. So in answer to Jimmy's question, as I said, it's not so much how much does he need to control. That's how much does he need to actually get a proxy vote out to people like us and say, would you like to sell your Occidental shares for whatever the price might be? And then we get to vote on it. And if the answer to that vote is yes, which doesn't depend on us, it really depends on these guys over here because they own the bulk of the shares, then Occidental will be sold. And of course, he can take Occidental private, or he can leave it public. He can do with it whatever he wants if he actually ends up buying the company. So let's just change gears here for a second. So FedWash Reserve on Twitter said, Rudy, can you please make a video on the tax implications for current shareholders if Buffett tenders Oxy and Tricky Vicky and her board accepts? Now, in answer to the second part, FedWash Reserve, Tricky Vicky and her board actually only have a fiduciary duty to make the proxy vote available to the shareholders. So Vicky, Holub, and the board cannot make a decision because they own too little of the company. All they can do is say, we accept the fact that you've called for this proxy vote because you want to buy the company. The board, in principle, might even disagree and say, we don't want to sell the company, but we have to, because it's our fiduciary duty, issue a proxy vote for the shareholders to vote, which comes back to the previous point I just made. So people like us can vote, but you don't have enough shares. So the guys who are going to make that decision are these guys over here, led by Warren Buffett, if that is what he chooses to do. But now the question, the first part of the question says, can you please make a video on the tax implications for current shareholders? Now here's where the discussion becomes a little bit more difficult, right? Now, what will happen is if your shares are sold, and remember, this is not you deciding to sell your shares. This is the board accepting the proxy vote, which is the majority of the shareholders, and they say, okay, we've agreed to sell the company for whatever, $75 per share. This creates a tax event for you. So if your cost basis is, let's say, $15 per share, and the company is sold for $75 per share, you have a $60 gain per share on which you will have to pay taxes. Now, if you add that to your income that you're already earning because of your job or your multiple jobs or whatever other sources of income you have, you may find yourself leapfrogging into a completely different tax bracket, and suddenly you find yourself liable for a whole lot of tax, which is going to eat a big chunk out of your investment. So there are very few things that you can do in order to mitigate this risk. There are a couple of strategies that you can deploy. So in the first place, if that were to happen, so using my example, your cost basis might be $15, $25, whatever, and the company is sold for, let's say, $75, just to make an easy round number, right? So now I have a $60 gain per share, which is a taxable income, and I'm going to have to pay tax on that. So there are a couple of things that you can do. You can say, okay, you know what? I have a couple of other stocks that are sitting in a loss situation. So what I'm going to do is a little bit of tax harvesting. And this is your first strategy. Strategy number one. You look at your tax portfolio, at your investment portfolio, and you say, I have this huge gain on the one hand, which is taxable, but on the other hand, I have some other equities that I own. They're not going to be energy stocks because they're all profitable. But let's say you own some other horrible stocks, like technology stocks, you know, Facebook or something like that, or Shopify or eBay or something, and you have huge losses on those. Sell them because it will offset the gains that you make on Oxy, and you get rid of those dogs anyway. And that way you can actually not mitigate your tax risk, but you can at least reduce your tax liability quite legally by simply exercising your Oxy, which has been exercised on your behalf, and you've now sold your Occidental for a huge gain, and then you sell some of your stocks that you were sitting on a loss on, just to reduce that gain a little bit so you pay less tax. Other things that you can do, now, if you had watched my previous video that I put out there, and if you didn't, it's okay, because I'll tell you quickly. I mentioned in that video that I had just recently purchased another 500 shares of Occidental Petroleum for $60. So 500 shares at $60 is $30,000. Now, even using my example of $75 as a sales price, I'd have a gain of $15 per share on 500 shares, which would be a taxable income for me on which I would have to pay tax. However, what I did was, knowing that there's all these macro events going on, and remember, we can only control the controllable, right? We cannot control what is beyond our control. Those extra 500 shares that I purchased for $60, I purchased them in an IRA account. And an IRA account in the United States is a deferred tax account. So it's a retirement account, right? Most countries, in fact, probably all countries other than North Korea, have retirement accounts where you can invest. So if you have the ability to potentially transfer some of your Occidental shares into a retirement account, let's say, for instance, you haven't fully funded whatever your annual allowance is to put into that retirement account, whatever the number is, right? So in Canada, you have an RRSP and your limit per year is X, but you've only contributed Y. So maybe what you can do is take the difference between X and Y and transfer that into your retirement account, make a contribution, and then that will be tax deferred. In the event that the stock is sold, it'll just revert to cash, but at least you won't have a tax event because you put it into a retirement account. The other thing that you can do, which is easy for me to do because my family and I own a charitable foundation. So I donated a few hundred shares of Occidental Petroleum on March the 31st to my charity. Now, you can make a charitable donation as well, but in essence, what I'm saying is, if you do that, you're giving it away. In my charitable trust, I actually have the ability to donate the stock to my charity. It goes into the charity's investment account. And here's the beautiful thing about doing this, right? So you can see, and I'm showing you the actual transaction here. This is invoice number 1197. On May the 31st, I made an unrestricted donation to my charity of $20,000. And you can do the math yourself on that, whatever the price was on May the 31st. 20,000 divided by whatever the price was, that's the number of shares that I donated to the charity. But here's the thing, my cost basis on my Occidental stock right now in my trading account is only about $12, maybe $13 per share. So my donation in terms of cost, and let's just make it a round number to make it really easy. So let's say I donated 300 shares of Occidental Petroleum to charity. The 300 shares cost me 300 times my cost basis, which is $12. Which is effectively my cost is $3,600. But my donation is the actual market value of the stock on the day I made the donation, which is $20,612, which means I now have a taxable donation receipt for $20,000, even though my cost on that donation was only $3,600, just rounding to make it simple. But you get the idea, right? So there are some things that you can do. Tax harvesting is one strategy that you can deploy right away. If you have stocks that are in a loss situation, you can sell them at the same time you make a gain on Oxy, even if it's inadvertently and you hadn't planned it that way. The other thing that you can do is to transfer some funds, some of your Oxy shares, not funds, into a retirement account that is not fully funded yet for the year. And a third option that I just shared with you is to make a donation. And the neat thing about that is, I'm assuming that the majority of us have a relatively low cost basis on our Occidental stock, right? I'm sure, for the most part, the people who've been following me for the last 2 years do not have common stock with a cost basis of $60. You're more likely to have a cost basis of $26 or $16 if you're lucky, or even less than $10 if you're really, really lucky and you were smart to time the bottom. The fact of the matter is this: if you make a charitable donation, the cost of your donation is the number of shares. So let's just put this into numbers quickly just to make it really, really easy. You donate 100 shares and your cost base is $20. 100 shares is $20 is $2,000. That's your cost. But right now, the 100 shares are trading at $60. So you get a $6,000 donation receipt for a cost of $2,000. Get where I'm going? So that's another strategy that you can deploy. Other strategies for tax mitigation just don't work in this scenario. If Oxy gets taken private, or if Oxy is acquired at a certain price, there's literally nothing that you can do, to my mind anyway, beyond the 3 examples I just gave you in terms of mitigating your risk, or otherwise deferring your tax, or otherwise just paying less tax by selling some stocks that were at a loss, in a loss situation at the time of the transaction. Now, to be fair, I have no idea, as I said at the beginning, what Warren Buffett is planning. I don't know anyone at Berkshire Hathaway. I've never spoken to Mr. Buffett. I've never spoken to anyone at Berkshire Hathaway. I have never spoken to any directors at Occidental Petroleum. I have spoken to investor relations many, many times, but they just share public information because they're not allowed to share any information that's non-public. Otherwise, I might go to jail. So effectively, I don't know more than you. All I'm trying to do is to give you a little bit of daylight in terms of what might happen if Warren Buffett says, hey, you know what? I'm just going to scoop the whole company, puts a call into Vanguard, BlackRock, SG&A, etc., and says, guys, will you back me up here? I'm going to offer 75. They might say, nah, we'll take 80 or whatever. The fact of the matter is, you and I can do absolutely nothing about that, but you can, at least to a degree, mitigate your risk somewhat by either reducing your tax burden or otherwise just doing a couple of trades, topping up your investment retirement account or donating some of it to charity. I mean, you made enough money anyway, right? So those are some of the things that you can do. And if you have any other ideas or good ideas you want to share with the community, please comment and let us know. Anyway, on that note, this is Mr. Oxy saying thanks for watching. I'll talk to you soon. Bye-bye.